Welcome everyone to today's webinar, How to Export from the US to Canada. Thank you for joining us. My name is Dave Noah and I am founder and president of Shipping Solutions. Since 1995, our export documentation and compliance software has helped thousands of successful exporters more efficiently generate accurate export documents and stay compliant with import-export regulations. To help educate our customers and the wider international trade community, we regularly host free webinars like this one on the various aspects of international trade. Today we are lucky to have Alessio Lencioni as our speaker. Alessio is the head of product and strategy at VAT IT Stream, where he leads the design and delivery of cross-border trade solutions for U.S. businesses expanding into global markets. His work bridges the gap between strategy and execution, helping companies of all sizes navigate the complexities of logistics, duties, VAT, and international compliance. With a focus on practical outcomes and scalable systems, Alessio brings expertise in turning global trade challenges into growth opportunities.
Great, David, thank you very much for the introduction again, and good morning everyone, and thank you for joining us. So as David mentioned, my name is Alessio Lencioni and I am part of the VAT IT Stream team. I've been working quite closely with David over the last couple of years, and him and his shipping solution team, we've founded this program called Global Gateways, and I think it's part of the bigger passages series that we speak about when doing these webinars. And I think today one of our larger focuses is certainly around together. I think our mission is quite simple, and that is to make it easy for US companies to expand internationally. And I think there's no better place to start other than the market that is directly to our north, and that is Canada. So today we will walk through what it really takes to ship into Canada successfully, how we circumvent and ultimately still maintain full compliance with some of those changes that we've seen with DDP shipping and shipping at large into Canada as of this year, and not just focus on it logistically, but also look at it from a compliance perspective and ensuring that we always try and maximize profitability throughout this entire chat that we have today. So by this end of the session today, I would like everyone to have ultimately at least a high level knowledge in terms of what some of those common challenges look like for US exporters when shipping into Canada, why things go wrong, and ultimately how to avoid those pitfalls. And lastly, how one can implement a structured solution for importing into Canada and still maintaining a fully compliant solution that focuses not only on logistics, but also looking at the GST and import GST specifically component in terms of how we can facilitate that. I would like everyone to ultimately look at this session as a roadmap to shipping into Canada. And ultimately, this roadmap will ultimately help circumvent those headaches that have come about this year and also have a future-proof solution going forward. Some of the key principles that we'll look at today are basically on these 5 primary points. The first being the Canadian opportunity, what that means commercially, and what some of these hidden traps ultimately look like, what the problems are, and what are US businesses ultimately up against, looking at some of the primary challenges that are brought about because of these problems, and highlighting where the breakdowns ultimately come in. I think the fourth perspective is something that I found quite valuable, and that is the actual business impact. So the practicality in terms of how this impacts businesses and what happens when it goes wrong. And the fifth point is kind of how we wrap everything up in a bow, and we don't necessarily speak about the problems and the challenges, but we actually outline the solution. So I do just want to point out that we will speak about a lot of what we might perceive as negatives from the onset, but they are anything but that. They are actually items that allow us to build towards a solution in the end. So Thank you very much for that. So if we focus on the primary aspect that we want to look at today, and that is that Canada is the United States' largest export destination. So I think the number is quoted at close to about $400 billion worth of goods flow north every single year as exports out of the US. It's a natural market for businesses to expand into. They have the same language, same standards. There's close geographic proximity, and there's also a lot of similar cultural similarities between Canada and America. But the big misconception that we see many businesses make in this is that because it feels familiar, it must be simple. Unfortunately, that's not necessarily how this works. And I'm sure there's a few of us on this call today that have experienced that firsthand. But although the Canadian border looks like just a simple line on a map, it's more than that. There's customs jurisdiction, and secondarily to that, there's a tax jurisdiction implication that we cannot forget. And with those different jurisdictions, they come with their own set of rules and regulations, and those are ultimately practically enforced through different forms and items that we have to comply with. And even though we are a foreign-based US business in many of these instances, because we are wanting to act as the importer of record in Canada, it is our responsibility to be compliant with those laws across the board. So once a shipment crosses that line into Canada, it triggers a chain of government processes and responsibilities. So this would amount to import declarations, duties, taxes, and the requirement for record keeping. And ultimately, this is where we see things get quite tricky. And the reason is because moving goods into Canada was more primarily a logistics-only task. It was about getting goods from A to B. But now we look at it and there's multiple agencies that are involved in this transaction, both from a logistics perspective as well as from a compliance perspective. I know I have had this discussion with David before, and what we see within our business is that time and time again is that the businesses that succeed, specifically those that succeed getting their goods into Canada, are the ones that treat compliance as the primary objective that they try to resolve, and ultimately logistics is the solution that follows it in tow. And it's just remembering that your end destination isn't just a destination, it's what enables you to ultimately get your goods there. So the difference between getting this right and wrong is ultimately structure, and that's where our key focus will be today. Fantastic. So if we look at the problems, so many, if not all, US exporters start the prospect of moving their goods into a foreign market such as Canada with good intentions. Everyone wants to do things by the book and as easy as possible so that nothing trips them up. In this example here, a US business might have a Canadian customer lined up. The orders are ready to go. They've been paid for. The truck is on standby. The items just need to be shipped. But what happens next is where the complications start. And what we find is that you can't ship until you ultimately have some of these processes in place. And two of those key processes that many businesses hear of is that you require a business number. Now, a business number is issued by the Canadian Revenue Agency, and that's something we'll touch on a little bit more shortly. And once you've got a business number, you then hear that you have to register on something called CARM, C-A-R-M, and it's something you've never registered for before. Then, once you've registered for CARM, you understand that you now need an importer's bond or a customs clearance bond in Canada, and no one explains to you why you ultimately need this. So in many instances, we see businesses start relying on customs brokers. Now, there's no issue with that. In many instances where there are time-sensitive scenarios, we see customs brokers and freight forwarders utilizing their own BN numbers and facilities in Canada to clear these goods, which technically works. There's no issue with that. However, it does leave these businesses blind from a compliance perspective because they still don't necessarily have the answers as to what's happened at the Canadian border. So suddenly we have what looked as a simple export now becoming a patchwork, if I can describe it that way, of disconnected processes. So one's managed by logistics, one is managed by a broker, and ultimately one by an accountant if we start talking about the later import GST component that we'll speak about now. So that's the fragmented picture that many businesses ultimately find themselves in. So I just want to touch on two very important topics or distinctions that we just need to be sure of. And the first is the Canadian Revenue Agency, or more commonly referred to as the CRA. So this is the federal agency, if we can describe it that way, that is responsible for administering tax laws, including GST and HST. The second point to focus on is the Canadian Border Services Agency, and this is more commonly referred to as the CBSA. And this is the institution responsible for border security and customs. And it's important to keep the distinction between these two because they are ultimately separate in terms of their function. If we speak about the US warehouse and how do these items actually get into Canada, we need to break this down visually. So if we look at it from this perspective, the process starts at the US warehouse. You've packed your items, you've labeled them, they've got all the correct documentation on the package, and you are going to go about taking on the responsibility of being the exporter as well as the importer into Canada. So your goods leave the warehouse, they make their way up to the Canadian border. Now, once your goods arrive at the Canadian border, this is where the carrier or the freight forwarder will submit the documentation and data to the Canadian Border Services Agency, or the CBSA, as we just learned about now. They will inspect all that documentation to ultimately see if it is compliant with the requirements for entry from a customs perspective. They will then hand over that information to the Canadian Customs Agency, which forms part of the CBSA. The CBSA will now start processing all the information on that documentation. So they'll start looking at declared values, countries of origin, HS codes, as well as duties, to now ultimately decipher what needs to be done. In order for this to be done properly, you need to have an active CARM account. Your BN number needs to be obviously in place, otherwise you wouldn't have been able to register your CARM account, and a customs bond already needs to be in place. Now, I know this sounds like a lot, and we'll start breaking this down a little bit later, but this is just to give an overarching picture. Finally, you get to the CRA, and this is where the tax aspect of this shipment ultimately lies. So once you are registered for GST, this information would be then digitally submitted to the CRA to say this import has taken place, and this is what will allow you to later on reclaim this import GST that you've paid. But I must stress that if any one of these four stages isn't set up correctly, the whole shipment can ultimately get stuck. And if there is a stuck shipment, this can lead to a number of frustrations that ultimately ensue within this process. So the way how I often like to practically look at this is that if you can imagine a 400-meter relay race, if each handoff isn't perfect, if one runner misses, the whole team loses momentum. And that's because we've got a disconnected and fragmented process where there's multiple individual parties responsible for each individual aspect of the transaction. And this is what we'll look at now, is the same process, but ultimately who is the actual person. So this is now looking at the human side of this process. So you've got yourself, you, the exporter, the US business, who then works with a carrier and a freight forwarder, who then hands over all the required documentation to the actual agents at the customs post or at the border post. And this is where the customs broker, who might still be part of the greater freight forwarder network, is responsible for now handing over all that documentation and ensuring that the customs clearance process is followed. And then the later stage in terms of GST reclaim is then substantiated by your accountant. Each one is their own system. They each have their own process and their own timeline, importantly, in terms of how this is all done. But ultimately, no one is speaking to each other. So your accountant is not speaking to your forwarder is not speaking to the broker, and the broker is not speaking to you because they're telling you to speak to your accountant. So this is where a shipment ultimately stalls. So you end up in that frustration loop of phone calls and emails. So where you'll be told to check with your broker, who then tells you to ask the CBSA, who then tells you we're waiting on the carrier. So it's that infinite loop. So it's important that this is what we see as the number one cause of cost and delay in this cross-border trade process, is that there needs to be a central point of ownership within this process. I think before we now break up into what this would look like practically, I think it's important to understand the three primary pillars that we've spoken about in a little bit of detail now. This is where I want to ultimately build these foundational building blocks in terms of understanding how this process into Canada would work. So the first column or pillar that we can look at is the business number, or more commonly referred to as the BN. This is your company's identification document with the Canadian Revenue Agency. Think of this as your social security number for doing business in Canada. You need to be recognized as an importer of record in Canada, and by that, it will then allow you to register for GST as a foreign-based business if you now want to recover import GST. Without it, your broker will not be able to file shipments for customs clearance under your name as the US business, which means they would then most likely have to use another, if not their own, BN number, which means you lose control of the data as well as the ability to reclaim that GST. The second aspect that we look at is the CARM portal. So as mentioned, this is the CBSA's customs platform, and it's a new digital customs platform that was implemented at large, I think it was in April of this year, which designates that every importer must link their BN number to their CARM account before they can import goods. And it's a very simple rule. No CARM registration, no clearance. It's quite literally that simple. The third aspect to look at, and this is slightly more opaque for many businesses, and this is the customs bond. Now, it's important to understand that this isn't a payment deferral for duties and taxes. It must be viewed as a financial guarantee. It's basically an allotment of money that is paid over to the Canadian Revenue Agency, to the CRA, as a deposit for future shipments that will ultimately be submitted through for customs clearance. It is basically a vehicle that allows you to tell the CBSA that if there's a shortfall or an underpayment or an audit issue, you are covered with this deposit. So now I know that might seem as a hindrance in many ways from a cash flow perspective, but as an American business in many ways, I would actually look at it in the converse way, to say that it is what I would view as a safety net. It ensures that your goods can be pre-cleared before any form of prepayment has been cleared with customs, and it keeps you compliant and it keeps your items moving relatively seamlessly. And we've seen this work in practical terms within our business quite significantly, that when you've got all of these facilities in place, your shipments move smoothly and really cleanly into Canada. So just to summarize this, these three pillars of the BN, the CARM portal, and the customs import bond are the backbone of a compliant import program into Canada. Now, if we look at the primary challenges, we can break this down into, I would say, these 6 primary responsibilities. Now, if there is no BN number, as mentioned, the broker might either use their own or you're forced to use another business's, and you lose visibility and that ability to ultimately reclaim those taxes. The second aspect to look at is no CARM registration. As mentioned, this is simply does not allow you to import your goods into Canada. The items will either be returned or destroyed depending on the situation and circumstance. A similar instance comes into play for the lack of an import bond facility. Your items will not be cleared into Canada, and they'll either be returned or destroyed. If we now look at it from an unapproved broker perspective, your broker needs to be approved with the Canadian border agency, with the CBSA, because they need to be able to integrate from a back-end perspective with the CARM portal to ensure that all data and documentation is submitted correctly. So if your broker is not approved by the CBSA, again, you'll find issues and delays until you've appointed a broker that is approved with a Canadian border agency. In terms of no GST registration, this isn't necessarily a prerequisite in order to import into Canada, but without it, you will not be able to reclaim your import GST that you are paying for. So it becomes a sunken cost within your exporting endeavor. And the last point is ultimately, if you are utilizing multiple parties and companies within this import process, there's too many disconnected vendors and there's no single owner. So everyone might be doing their part, but nobody is ultimately connecting the dots, if we can put it that way. Now, I think it's important to look at this from a practical perspective, in that these aren't isolated problems, they're systematic and they are preventable. I would like to ultimately put some numbers behind this too, and we'll start speaking about this in practical terms with how many businesses in your scenarios might experience it. So when compliance is not handled correctly, these are some of the typical issues that we see. Shipment delays. So without an active CARM registration or importer's code, your BN number, shipments can sit in limbo at customs for days or weeks. So those delays disrupt the customer delivery cycle for many of you. And secondarily to that, you'll have those storage and demurrage costs. And then again, you lead down to that path of either return to shipper. So those items are returned to the US, and now you've got that return leg to pay for too. And secondarily, if the situation warrants it, it might result in the items being destroyed. In the second case, if we look at the lost tax recovery, without a GST registration, importers lose that ability to reclaim that 5% import GST of tax paid over on the importation of goods. This erodes profit margin and artificially inflates landed costs. Financial strain. So without a customs bond, importers cannot facilitate the clearance of their goods, because without that security bond with the actual CBSA, there's no way for the CBSA to secure their risk on duty and taxes. Again, that can ultimately result in goods either being returned to sender or ultimately destroyed. Audit exposure. For me, this is something that's very important and something that we haven't necessarily touched on now, but there's the concept of record keeping and having that record keeping being done in a compliant way. So if there are any missing or inconsistent importing data, this can trigger penalties, but also ultimately back assessments. So even companies that have been compliant all the way up until that point can lose credibility. The CRA will go back and do historical analysis and go through every previous shipment with a fine-tooth comb. And no one necessarily wants that, but if all your documentation is in place, it's something that is easily rectifiable, and that process can be tied off and remedied quite quickly with all the correct documentation in the correct format in place. The last point to focus on is operational drag. So what we see is managing 3 or 4 uncoordinated service providers, as we spoke about. So a different broker to a carrier, to a different tax agent, to a different freight forwarder, creates a lot of duplication in function and work. A lot of that which is manual. And again, that doesn't allow you to connect those dots, as we spoke about. And you've got very little visibility in terms of what is happening when. If we look at this in a numbers term, if you are importing $1 million worth of goods into Canada over a yearly period, without a GST registration, that's a minimum of $50,000 of loss straight to your bottom line, because you aren't able to reclaim that. And again, that loss can only increase if you've got more of these issues in place without the correct process laid out. As promised, we will now look at this from a positive lens in terms of how do we take all these common pitfalls and these issues and build this into a solution or a playbook that we can ultimately work within a positive realm. So what we call a playbook is basically that roadmap that we spoke about at the very beginning. And this is something that Global Gateways does very well in terms of creating that bespoke and unique solution, that it's not just like a basic software tool, but it creates that bespoke solution to your business. So business A and business B might be similar, but they sell different products. They've got different nuances in terms of how their items need to be delivered, items need to be consigned, and ultimately cleared. And it integrates the three worlds of logistics, customs, and tax. For us, I think that's a super important way in bringing all those moving pieces into one connected workflow, so that you ultimately have that process ironed out, so you can focus on what the core aspects of what your business is. And I think in many instances, logistics is not the front in mind issue that anyone necessarily wants to be dealing with, but it becomes a process that they have to deal with because there are issues at hand. So if we look at phase one, which we would ultimately call the foundation, this is based on those three pillars that we spoke about, where you would first go about obtaining your business number, which is your identity, your business's identity in Canada. Step two would be to register on CARM, which is that access point to customs and duties and customs clearance. And the third point is the customs clearance bond, which is that financial assurance, which enables you to do continuous clearance for multiple shipments going forward. Once you've got those three primary pillars in place, you're officially recognized as a compliant importer into Canada. So this is that key moment where you can start moving goods from that very instance across the border in your own name. Phase two. Now, phase two is only possible once you've got all three of those pillars outlined in phase one completely closed off. And this is where the operations of the process ultimately kick in. So once you are approved and recognized as a compliant importer, you now have to appoint that licensed customs broker. So that business that is able to file those entries under your BN and link it to your CARM portal registration. This is also the process where your GST registration would be utilized for customs clearance, which would then allow you at a later stage to reclaim those import taxes or that import GST. And this is where you integrate your logistics, customs, and tax workflows. So meaning that your data flows cleanly from warehouse all the way through to the Canadian border, linking it through your invoicing. And ultimately, we can describe this as your systems all being in sync. Then the last point is where we speak about management and optimization. So this is where, as we've just spoken about, your shipping data is all aligned, your customs filings and record keeping has all been facilitated on your behalf by unifying it all under one solution. And it ensures that DDP is applied correctly. Now, an important aspect, and as mentioned a little while ago, is that insistence in being positive in keeping all your records in check. And a solution like we've spoken about now allows you to keep all of your entries compliant. You are able to reconcile them against your GST filings, that in the event of an audit, everything is in place. So when we speak about a playbook, it's not just compliance, but it's ultimately about creating a reliable, repeatable, and most importantly, a profitable export process into Canada that you can use for many years to come. In closing, this playbook gives you the framework to ship confidently, as well as to maximize your tax efficiency while still remaining audit ready, if we can put it that way. So whether you're moving one high value shipment a month or many lower value shipments daily or monthly, the goal here is to create a solution that makes this trade process simple, compliant, and future-proof, as we've spoken about a lot today. So thank you very much for joining today. I hope this gives everyone the clarity and the confidence to expand into Canada in the right way. I believe now we will probably loop to some Q&A. And of course, if there's anything further that you would like to discuss in application to your own business, we would always be happy to set up a one-on-one and follow a conversation after this. So thank you very much.
Thank you, Alessio. That was a great presentation. Appreciate it. As you mentioned, we will now be taking questions from attendees. The first question, and it was asked a couple different ways, Alessio, is related to how this process applies based on the Incoterm that is used for a transaction. Is this a requirement for the business number only when a shipment is being done DDP, delivered duty paid, or does it apply to other Incoterms as well?
I think it's more commonly applicable when it comes to DDP. And the reason why is that what we see in many instances, whether it be a small independent business shipping to Amazon or to Walmart in Canada, whereby they are required to get those goods to that 3PL in Canada or to that warehouse where distribution takes place. Or it's an e-commerce business that needs to be able to facilitate that door-to-door solution for businesses or for private individuals in Canada. Those are some of like the situations off the top of my head that I can say would require a necessity like this. So if you're shipping goods ex works or DAT or DAP, the requirement wouldn't be there because the consignee or the importer of record on the Canadian side will be taking on those responsibilities. But this is more specifically in the notion of DDP, where you are required to act as both the exporter as well as the importer.
So when the goods reach the border and the information is being shared with the Canadian Customs Authority, is that information generally provided electronically, or is it paper manual documents?
So your items would still move with all the documentation attached to the actual shipment itself. But the reason why you need an approved customs broker by the CBSA is that they will take all those electronic manifests and actually submit that through the CARM portal to the Canadian, to the CBSA as well as the CRA. And that is the electronic process that is now kicked into place this year in Canada. So in short, this is all now done digitally, but there is always a backup manual process that's actually on the documentation itself that always needs to corroborate to the actual shipment.
You mentioned the federal GST. Are there requirements for paying taxes to the individual provinces as well, depending on what the destination is for the goods entering into Canada?
Correct. It does depend. So in many instances, some provinces will require you to register for GST as well as PST, where the federal and provincial tax are separated. In other instances, we've got HST, which is a linking of GST and PST into one taxation line item, if we can call it that way. So it's all dependent on the province where your goods are going to be entering into, and secondarily where those sales will be taking place. So it is just dependent on that nuanced approach in terms of where you're going to be making sales and where your goods are either going to be stored or entering into.
Do you need to have a physical presence in Canada in order to apply for and receive a business number?
No, you do not. However, your Canadian broker needs to have a Canadian presence of sorts that allows them to ultimately act as the approved customs broker with the CBSA.
And then can you talk a little bit about the reclaiming the GST, what that process is that you mentioned it was 5% of the GST. Can you just kind of talk about that a little bit more?
Sure thing. Without going into too much granular detail, very similar to what we spoke about a few weeks ago going into Europe, and what is very different about importing goods into Canada as opposed to America is that you've got the ordinary duties and tariffs that are applied to the importing of items into Canada, dependent on the country of origin and the type of commodity. But you've also got this different taxation of GST that is applied to the import of goods, that is ultimately applied across the entire country, regardless of province or port of entry into Canada. Now, what makes GST quite important is that it can either be in the form of GST or HST. So, as mentioned, HST is the combination of provincial tax or state tax, as we would refer to it in an American way, and the federal tax in one tax item. And what we would ultimately do is we would take all of your customs entry documents, so your commercial invoices and your customs clearance docs, as well as any sales invoices that you've had to either a private individual or to another Canadian business. And we would consolidate the output GST against the input GST. So the input being the import GST and the output being the sales GST. And we would ultimately look and foresee that your output GST would ultimately be collected and paid over to the respective tax office. But in many instances, we see businesses not reclaiming that import GST. So it's money that's being left on the table. So without going into too much of a granular process, David, that's how the process works practically. But because, as we spoke about, all one unified system being taken care of with global gateways, it allows us to facilitate that process very easily because we can prepare those registers on an ongoing basis for submissions to the tax office.
When exporting to Canada, are U.S. companies required to file EEI through AES?
I don't want to lie. And David, I think this is more your purview. I think it's dependent, but I would, so if you wouldn't mind, I might lean on you for this answer. But I believe in most instances it would still be required, with, I think, certain use cases where it isn't, depending on the type of commodity.
Yeah, and actually, I would flip that. So in most circumstances, it is not required.
It is not. Okay.
Right. And that's because the U.S. and Canadian governments have information, data sharing arrangement between the two countries. And so the import data into Canada is shared with the U.S. Census Bureau. And so those statistics are created or are collected that way. So in most cases, you do not need to file unless there is a license requirement, or a used vehicle would need to be filed as well.
David is definitely the US export expert by every means of the word.
Okay. My company has a parent company with 3 children. Does the business number, the BN, have to be, do you need one for each branch, or can the parent hold the information and the branches all use the same BN? Can one of the branches hold the BN and the others use it, or does each branch need the BN?
It depends on how you want to ultimately structure it. I can't say for certain without understanding how the invoicing process would work. Ultimately, in short, the children companies can use the parents company's BN, but it isn't an important distinction to understand that the children companies can then not reclaim that import GST. If they do want to recover that GST, it would have to be up to the parent company to recover that import GST. But in short, the children company can utilize the parent company's BN as the importer of record, basically, for their transactions.
Okay.
But there would need to be corroborating invoicing showing that this is a movement of goods from company A to company B, for example, being the parent company.
This is a follow-up to the question about the Incoterm used and how that affects the requirements. If you are shipping via one of the couriers, UPS, FedEx, or others, do they take care of collecting the GST, or do companies need to be doing that themselves?
So it depends on who's doing the clearance. So if FedEx is doing the clearance, then FedEx would be the broker, basically handing over the GST as well as the duties over to the Canadian border agency. However, if they are not the broker, then it would be you'd have to appoint a broker that would then pay over the duties and GST, if I understand correctly. But it's important to recognize that FedEx or DHL or UPS, whoever the freight company or freight forwarder are, or the customs broker will not help you reclaim that GST.
Okay.
That's to your own prerogative to reclaim.
Anthony doesn't have a question, but he thinks you did a fantastic job, Alessio. Appreciate the clarity that you provided, and I agree very much with that. Could you explain more about the documentation required for import into Canada, specifically the Canada Customs invoice compared to the seller's standard commercial invoice?
I am not completely up to spec with exactly what the granular differences are, but that is something that we would help you with from the onset. So we've got checklists that basically outline exactly what the requirements need to be on the commercial invoice, as well as the packing list and or corroborating information such as the bill of lading or the weighable in that specific instance. And the ultimate document pack that you have won't necessarily change for normal commodities. If you've now got more specialized commodities such as dangerous goods or maybe like food related items, there will be additional information that you would need to supply to the respective customs agent. But I know, again, this is something that Shipping Solutions helps with quite significantly in terms of outlining exactly what those requirements are from a documentation perspective. And from a practical standpoint, it's a feature that's included within global gateways.
Yeah, and it's my understanding that the Canada Customs invoice is required if the goods are over a certain value, although I should say the information that's included on the Canadian Customs invoice is required. It doesn't have to be that specific form if that same detail of information is included on a standard commercial invoice. So,
correct. I think this was a larger issue historically. I think nowadays this process has been significantly more streamlined in that commercial invoices in many ways have become relatively standard globally.
if your business is registered in Canada, what are the steps then to access CARM?
Almost identically in terms of how you would do it as a foreign-based business. If you are a Canadian-based business, you would have a BN number, and you would either register for CARM yourself, or it's a service we offer too, in terms of actually getting registered on CARM, and then also maintaining that ongoing maintenance of the CARM portal on your behalf. So the process as a foreign-based business or a Canadian-based business is virtually identical.
Can you what is what does GST and HST stand for?
So I believe GST is general sales tax, and HST, I think it is harmonized sales tax, if I'm not mistaken. Someone I'm sure will correct me there. But the primary difference is that GST is that standalone national or federal tax, and HST is the combination of the federal as well as the respective provincial tax, if that respective province has an HST tax mandate, or if they opt for their own provincial sales tax standalone mandate. So, for example, Quebec has QST, which is their version of PST. So, if you're importing goods into Quebec, you would be importing goods that would attract a GST as well as QST or PST in that specific instance.
Is there anything required in US for export to Canada, such as export licensing or reporting?
Nothing more than what is normally required, but again, that is dependent on the commodity. Licensing is very much dependent, as David alluded to, on the commodity in a specific instance. So, for example, vehicles will need a license, and dual-use goods would require a license. And again, anything that is designated potentially for medical or food-related items.
Yeah, essentially, depending on what the product is who it's going to and how it's going to be used. That's regardless of where you're exporting to. That's going to impact whether a license may be required. There are more restrictions on exporting an item into Canada or into China than there is to Canada, for example. So it's still dependent on that. You still need to be aware of the general export compliance requirements, regardless of the destination. How do you know if your freight forwarder is complying with these import regulations in Canada?
You would have to ask them if they've got a certificate of registration with the CBSA. They should be able to supply that.
Do you need to pay duties and taxes for temporary imports into Canada?
No. Temporary imports are exempt from duties and taxes.
For shipping into Canada, is there a form of declaration of conformity or sheet required?
Not in most instances. Again, it would depend on the type of item being shipped, which would ultimately require if there is that certificate of conformity that's required. But in most instances, no.
There's one here on the USMCA. I'm going to hold off on that in just a minute here, but I do want to get back to that. How are outstanding balances in the CARM portal resolved for an entity that will be dissolving at the end of the year?
So you would then need to get in touch with the CRA, with your whoever is your accountant or your CPA that's helping you with the Canadian Revenue Agency, and they would ultimately ensure that any outstanding taxes are paid and settled, and any deposits that you currently have with the CRA are ultimately refunded if you intend on closing that specific entity.
A comment that this is way too complex, and I'm going to try to ship using terms other than DDP, which is nothing wrong with that strategy.
I hear it. It's dependent on the scenario that you need to be able to fulfill your goods.
Is it good, better, or worse to let your Canadian customers set up their own shipping, especially if they have their own broker already established?
Again, very similar to the previous comment. It depends on the arrangement that you have with your Canadian customer. If they are willing to take on the shipping process and they just require you to do the export clearance and act as the exporter of record out of the US, there's no issue with doing that process if they are better kitted and set up to facilitate those imports.
How do you find an approved customs broker?
Ultimately, I think it would be about firstly reaching out to a different number of customs brokers, or in many instances, I think utilizing facilities and businesses such as yours, David, such as Shipping Solutions, that are able to at least, if not point businesses in the right direction. And that's the whole principle of what Global Gateway is it's to allow for a trustworthy and consistent process that allows you to utilize basically vetted providers that are able to actually assist you in the correct manner.
Are there any additional requirements for exporting alcoholic beverages to Canada?
I believe alcohol products are controlled. So whoever is the importer would need to have a license to import alcoholic beverages into Canada. What those nuanced requirements are, I would have to check offline after this. But I would believe that alcohol is a controlled substance through international trade. So I've got no doubt that there would be some additional requirements there.
And if that's something you wanted to explore further, Michael, please reach out to me afterwards and I can forward that to Alessio. Where would you go to see if your product needs a license to be exported into Canada? So we have information. Kari has posted a link in the chat to our free guide on how to determine if you need an export license. I would encourage you to download that. If you have any follow-up questions, you can reach out to me about that. But again, that process is the same regardless of what country you're shipping to, including to Canada. It's just more restrictive for some countries than others. So I would encourage you to download that free guide. Sorry for another novice questions. There's no novice questions. We're all here to learn. We export many orders to Canada based on the previously answered questions. I presume now that we are paying GST on all those through our carrier and broker. If we did register, why would we be entitled to reclaim those funds? If they are reclaimable, why are they required to be paid in the first place?
That's a fantastic principle as to how Canadian taxation works in this specific instance. You are required to pay it because it's a way for the Canadian Revenue Agency to ensure that it is paid at some point in the transaction. And the responsibility is up to you as the trading entity to ensure that you reclaim it where you are entitled to reclaim it. So again, really not a novice question at all. In terms of whether you'd be able to reclaim it or not, we could work through that process with you, understand how your transaction and sale is taking place and what Incoterm is being used and who's acting as the importer of record. We would go through all those processes and then we would assess if we can also backdate any historical reclaim that we can do for you.
Jessica asked if she can get a certificate of attendance for this webinar. Like all our webinars, if you would like to get a certificate of attendance, please send me an email. I will be happy to provide that to you. And she also confirmed that HST stands for Harmonized Sales Tax. So thank you for that. Now we don't have a lot of time and this can go really deep in a hurry, but are you able to speak to importing of USMCA qualified goods with the HS code 7308.10? Are they still affected by Canadian reciprocal tariffs?
I'm going to be honest with you, I'd have to look at that in more detail, and I'd be more than happy to answer that after this via email. But we can definitely look in that in more detail.
Do you know if, because of the tariffs that are being imposed on items that aren't USMCA qualified, has there been an increase in audits of FTA claims between the US and Canada now?
I think naturally, yes. We've seen, I wouldn't necessarily say there's been more audits, but we've seen that there's been a lot more attention to detail from a customs entry perspective. So we've seen the CBSA paying much closer attention to how items are consigned, what HTS codes or HS codes rather are used for declaring those goods, and to ensure that there isn't anyone trying to misdeclare those items as something that would fall within part of the agreement. So that's what I can speak to, and I've got no doubt if that's being done and there are suspicions that are raised, that they will be doing further audits and historical checks on key companies that they think might be in violation.
Yeah, I agree with you. All right, well, that's I think we got through most, if not all, of the questions. Thank you very much for sharing this information and taking the time to meet with us. In addition, we've created a resources page on our website that includes links to the resources that we mentioned today, as well as to register for upcoming events. You'll see that URL on the slide, as well as a QR code you can follow to get to this page. Always feel free to send me an email if you have follow-up questions, and I will share those with Alessio. If you want to learn more about our global gateway services and how we can help you export into Canada, please reach out to me as well, and I'll be sending out some more information about that service as well. Finally, please check out the Shipping Solutions YouTube channel. We've now published more than 300 basics of exporting and importing videos on our channel, including a new series I'm calling Cracking the Code of International Trade, where I provide a quick explanation of some of the hundreds of acronyms used in international trade. So please check those out, and if you find them helpful, I would appreciate it if you would subscribe to our channel. It helps us attract great speakers like Alessio and Lindsay and others to provide this free information to all our clients and people involved in international trade. So I think that's it. Thank you again, Alessio, for your excellent presentation. And I want to thank everyone for joining us, and please, everybody, stay well.